It looks like to me that the market has really been seesawing over the last 5 days. Kind of, it goes up a little bit, comes down a little bit, which has kind of reversed its course over the last 3 to 4 weeks, where we've seen basically a downtrend that's kind of moving sideways. I think the market is trying to really still feel this out with these tariffs and see what kind of effect they're going to have on the market. But today there's been some news that the market is thinking that we're going to possibly go into stagflation. Grayson, can you explain that to the viewers?
Sure. Stagflation is when you have economic decline, so when GDP is going down, and then you also have inflation. And it puts you in a unique predicament because the Federal Reserve can't do anything about it. They can't cut rates because that'll make inflation go up, which will cause a problem, even though it might help the economy. And they can't raise rates because that would stifle the economy, but it would also take care of that problem with inflation. So they have really one arrow in their quiver with interest rates. They can also adjust the federal funds rate too, but that's kind of another topic for another day. But the big thing that they have is interest rates, and they can't do anything if they have both of those things that are going wrong.
Well, Grayson, we've got kind of the Trump effect on the economy right now. If you go back to November, December, a lot of the economists were predicting that we would have GDP growth this year of a little better than 2%. But now with all these tariffs, because so many economists didn't really think that Donald Trump would go through with it, now they're kind of adjusting where they're believing we're going to land this year. Some of them says that we're going to have somewhere in the neighborhood of 1.7% growth. But Grayson, that's a good bit higher than recession numbers, when you have negative growth. So tell us what you think is going to happen with the economy within the next 6 months.
I think that things are going to get straightened out. I really do. There may be some volatility that we'll continue to see, but I know that you've been talking about this all just being a negotiation tactic from Donald Trump, and I think that's exactly right. I think he's setting up these other countries like Canada, Mexico, China, even the EU, so that we'll be able to get fair trade deals out of them, and so that we'll be able to be set up as an economy for the future and be in a better spot than we have been for the past 15, 20 years. And so we might have to deal with some short-term volatility, but I was watching a video the other day, and Kevin O'Leary was on there talking to some woman for Robinhood or Yahoo Finance. It was one of the two, and she's asking him about whether he thinks we're in a recession territory, and he says, I'm still hiring, and a lot of other people still are. And so it's just an interesting time right now. We're taking a wait and see approach, almost trying to figure out exactly what's going on, but we're not pressing any panic buttons over here.
Well, what's interesting, Grayson, to me, is Mike Tyson said many years ago that there's many talkers that will talk big until they get hit. And there's a lot of bantering back and forth from Trump and these other countries. But I think once they feel a little bit of these tariffs, I think it's going to change their attitude. And I think you're going to see this is going to be a very strong negotiating table for the United States. And that the United States, I believe, our GDP growth this year will be over 2%. So I'm bullish on the economy right now. Grayson, let's talk about a stock that you're hearing a lot of now because it should benefit from these tariffs with China, and that's Nucor. Can you tell us a little bit about Nucor and why you're seeing it now so much in the news?
Sure, yeah. It's the biggest steel company in the United States. It's going to see a lot of growth more than likely, unless that's already priced in, but I kind of doubt that. Just because of all the impact that we've seen from these tariffs in the last few weeks. But the biggest thing about it is that they produce steel here in the U.S. They're not getting all their stuff from China or from other countries that we've put tariffs on. And so they have almost like a protective wall around them so that their industry is not as likely to be competed against. It's kind of like the auto industry in the early 2000s and then the 1990s. They were able to continue to make their automobiles, and since we had tariffs and protective measures in place on our industries, they didn't have to face as much competition, which was really good for them. For the steel industry, especially the American steel industry in today's environment with these tariffs, it's going to be the same way. And companies like Nucor and companies like Bethlehem Steel very well might see a big time upside in the next few months.
We at Christian Values Investing are not long Nucor. We do not hold any Nucor stock. Nucor has passed our biblical screens, but it does not meet our criteria for earnings per share growth, relative strength, and other fundamentals that we look at. But it's been very interesting to see this mentioned over and over in the news. Grayson, talk to us today about the portfolio that was sent in to us, what this investor has, and what your recommendation is on this portfolio that was emailed to us.
Yeah, so the guy that sent us the email that has his holdings in it, he does like to get some dividends with his investments as well. So let's go ahead and cut to the chase and jump right into what he's got. He holds a couple of ETFs and a mutual fund from a company called Eventide, and they're known for doing biblically responsible investing. And so the first two ETFs that he has are called Eventide US Market ETF, the High Dividend ETF, and then the mutual fund is a Dividend Growth Mutual Fund. And so the interesting thing about these is the mutual fund's done okay. The two ETFs have done not so great, but it's not really fair to judge them because they got their start back at the end of 24 and the market's taken a little bit of a dip since then. But the big thing that we're looking at here is whether these investments pass biblical screening. And the thing that you would think is, since Eventide's a biblically responsible company, or they're known for doing this kind of investing, that all of them should definitely pass in flying colors. Well, the thing about that is the two ETFs don't. And it's not particularly close. So if we take a look at both of them, they both fail over 20%. And if you're somebody that cares about the way that you invest, if you're somebody that doesn't want to profit off of things that go against what the Bible teaches, that's something that you'd want to stay away from. And so also, if you're wanting us to take a look at what your holdings are, feel free to send us an email, and I'll put that down below. I'll put it in the description as well, and we'll be happy to take a look at it for you. And that's about all that we have for you today. So until next time, may God richly bless you.